Hello, and welcome to our Intro to Medicare seminar. My name is Melissa Cox.
My name is Eric Cox, and we specialize in retiree insurance products.
Today we're going to go over with you the basics to get you started on your Medicare journey.
Let's get right into the information. So the first question you may have is, am I even ready to be on Medicare? And the answer, if you're turning 65, is this, maybe. And we always say that, we say that often, but here's the reason. Because if you're going to keep working or if you're going to retire, it depends on what our answer is. Here's the two scenarios. We're going to cover this one first, the one that you're going to keep working. And the two scenarios are this. If your employer is what Medicare considers a large employer, it's going to be 20 or more employees. A small employer is 20 or less employees. The answer as to if you go on Medicare is dependent on that. So if you're working, let's take the first one. If you're a 20 plus employee company and there's a group plan, then the employer group plan would become the primary insurance. And what that means is that Medicare is the secondary, meaning that Medicare's costs would be passed along after the group plan takes care of its part. So in that scenario, if you or your spouse is going to keep working, then you're going to be on the group plan. Here's the question we would ask. What is your total cost of ownership for that policy, and what do your coverage options look like? And what I mean by that is this. Think about this. If you had a premium that was very, very low for a group plan, you might think, well, this makes sense to stay on this. My spouse is going to keep working. I'm going to retire now, but the spouse is going to keep working for the next 5 years. We're going to stay on the group plan because it's a low premium. But what if you have a high deductible plan? And some of the plans we've heard of lately are $5,000, $6,000, $7,000 deductibles. It might make sense for you to drop off that employer group plan.
What if you work for a small employer, 20 or less employees, or you're self-employed? That's actually a different scenario. In that case, Medicare is your primary insurance and your group insurance is secondary. So if you're not enrolled in Medicare, unfortunately, your costs of healthcare may not be covered.
Now here's a scenario that happened to one of our colleagues' clients. The client did not take Medicare. She worked for a 20 or less employer. She decided, you know what, I don't need this Medicare stuff. She didn't know about that Medicare was the primary. Then she has, a year goes by and she needs some surgery. So she signs up for the surgery, goes in, has the surgery, gets a massive bill for the entire portion that Medicare, being the primary, should have taken care of. She gets the bill for that, and then the insurance that she thinks she's covered with only has to take care of the second, much smaller portion. So 20 or less, make sure that's not what you do. So again, if you're going to keep working or the spouse is going to keep working, it depends on the size of the employer.
If you're either already retired, going to retire, or you're on small group employer coverage, you know you need to get signed up for Medicare. So how do you do that? Well, first of all, the question you would need to ask yourself is, am I going to take Social Security benefits now, or am I already? And if so, you should be automatically enrolled in Part A and also Part B, although you might want to check on that just to verify that that did get in place, and then you'll get your Medicare card in the mail. Now, let's say that you don't want to take Social Security benefits just yet. Maybe you're waiting for it to kind of grow a little bit, so you can wait. Well, in that case, what you'll have is an initial enrollment period. That period starts 3 months before your 65th birthday, the month of your 65th birthday, and then 3 months afterward. I would recommend that if you want to have coverage when you turn 65, don't wait till the last minute to enroll, because we have seen our experience in working with clients is that the Social Security office is backed up quite a bit. So it could take you quite some time to get your Medicare card, to get all of the paperwork completed. And so it may cause you to go several months out if you don't handle that a little bit quicker. So what you'll want to do is go ahead and call your local Social Security office and set up an appointment for enrollment. So even before you can do the enrollment, you need an appointment for the enrollment. So again, if you're getting close to that 65th birthday period and you know you're going to need that Medicare coverage, get started today. All right, so now that you know what you need to do to get enrolled in Medicare, we're going to talk to you about the A, B, Ds, and Cs of Medicare. Yes, we know our alphabet, but there's a reason we're going to go in that order.
The A portion of Medicare is, think A equals hospital coverage. And original Medicare, as it was envisioned back in the 1960s, A does not have a cost associated with it if you worked 10 years or what they call 40 quarters, 40. The reason for that is you were prepaying the entire time you worked for your Medicare Part A with your FICA taxes.
There is a deductible for each hospital stay that you have per what's called a benefit period. Those benefit periods last for 60 days for each time you stay in the hospital. The amount for that in 2021 is $1,484 per benefit period. Let's say you go into the hospital in January and you have a stay of like 10 days. It's about $1,500. You need to go to the hospital again in April. Well, that's more than 60 days later, so that's another $1,500. You need to go to the hospital again in September. That's another $1,500. So overall, for the year, you're looking at right there almost $4,500. Now, in addition to that, there's what's called coinsurance. Now, the amount of coinsurance will vary depending on what type of facility you're going into, whether it's a skilled nursing facility or regular hospital. It will also depend on the length of time you're staying in that facility. So that amount that you had before, if you had to go 3 times in the year of $4,500, is going to grow even more so than that into multiple thousands of dollars.
Now we're going to talk about Part B. Part B, think doctors. And what we try to envision here is A is hospital, B is doctors. Always remember that because that never changes. And Part B, unfortunately, has a premium, unlike Part A, which is $0 if you worked those 40 quarters or 10 years. The premium for 2021 for Part B is $148.50. That can be paid one of 2 ways. Because remember our 2 scenarios. If you're going to take your Social Security benefit, they will automatically deduct the $148.50 out of that and then send you the remainder as your Social Security benefit. The scenario where you're not going to take Social Security yet, you will get a quarterly bill where you have to pay 3 months at a time of $148.50. So that's helpful for budgeting purposes.
If you were a higher income earner, then you will have an income adjustment and your portion to pay for Part B will be higher than the $148.50.
Now the other thing about Part B that's interesting is the deductible portion. And in 2021, the deductible for Part B is $203 once a year. So it's not like Part A where it resets every 60 days. Right now, Medicare deductible is one time a year, $203. And also the cost that Medicare doesn't cover is the 20%. So Medicare was envisioned, again, back in the 1960s as an 80-20 plan. Medicare takes care of the 80, you're passed along the 20%. Let's do a scenario. You go into the hospital and you have a procedure done, and the cost for that procedure was $1,203. And you'll see why I'm doing that in a minute so I can do the math in my head. The portion that's your deductible is $203. So lop that off the top. Now we have a very round number of $1,000 that's left to be taken care of. How is that paid out? Medicare takes care of the $800. They pass the bill along to you, and you're responsible for an additional $200, which makes your entire cost for the procedure, your $203 deductible plus your 20%, which is $200, $403 for that procedure, instead of the $1,203 that you otherwise would have paid if you weren't on Medicare.
The monthly premiums, the deductible, you can expect that those will increase slightly year over year. For example, from 2020 to 2021, we saw a 3% increase in both the monthly premium and in the annual deductible for Part B. Something to keep in mind as you plan your Medicare journey for the future. So now we've been through Parts A and B of Medicare. We're going to skip C, come back to that later, and move on to D. D equals drugs. So Part D is your prescription drug coverage. Now, unlike Part A and Part B, that does not come through Medicare. Part D you would sign up for through a private insurance company. Just like with your Part B where you have an income adjustment, you would have that same thing with Part D. So if you're a higher wage earner, you can't look at the face value of the premium. You will be actually paying more for your drug coverage adjusted because of your income.
Now, one of the situations here, we usually hear people say, well, I don't have any medications. I'm healthy. I'm active. Why do I need a drug plan? Here's the reason. Because there is a Part D late enrollment penalty, LEP. Medicare loves their acronyms. And your late enrollment penalty this year in 2021 is 1% of $33.06, which is the national average for drug plans, according to Medicare, times the number of months you didn't have coverage. So 1% of 3306 times the number of months with no coverage. For the first few years, it's nothing. I mean, that's hardly anything to worry about, but it is still a penalty that stays with you your entire Medicare career. But as you start going 20, 30, 40, 50 months with no coverage, now you see the instance where that could start to add up. I met a gentleman one time who had gone 20 years and never had anything except Part A and B of his Medicare, and all of a sudden he wanted to look at a drug plan, and we did the math, and it was going to be ridiculously expensive for him just to have drug coverage.
Each drug plan has a different, what they call formulary, which is the drugs that they cover. And what Plan A covers, Plan B might not. So you need to know which prescriptions you are currently taking, what your dosage is, how frequently you take it, to be able to calculate what your overall cost is going to be. Because you'll want to look at your total cost of your drug plan, the monthly premium amount, how much it's going to cost you in copays for your prescriptions, and your copay is going to vary based on which tier of drug it is. Medicare has tiers 1 through 5, tier 1 being the cheapest, tier 5 being the most expensive, and see what all of that amount is going to add up to so you can pick the appropriate plan for your personal situation. Now we're just going to give you a quick overview of what Part C is all about. Part C, also known as Medicare Advantage plans, is a bundling of Parts A, B, and usually D. The Medicare Advantage plans that are available in the larger metro areas are often offered at a $0 monthly premium. And so sometimes we get asked, well, how can there be a free health plan? It is not free. Just keep that in mind. Remember what we said earlier? You have to have your Part A and B coverage in order to qualify for these additional coverages.
Medicare pays private insurance companies a fixed dollar amount to administer your health. And it's a set fee. And I did the math a few years ago. In the city we live in, the fee was $813 per member per month. And if you do that math, that adds up to nearly $10,000 per person that goes into one Medicare plan one time. So you can see how there's a lot of money in play for these Medicare Advantage plans.
As you can see from what we've discussed so far, Medicare does not cover all of your health care expenses. Medicare Parts A and Part B provide a great foundation for your health care, but you're probably going to want to get some additional coverage to cover the gaps that Medicare isn't covering for you.
So option 1, Medicare Supplement, also known as Medigap, you might hear both, because it supplements or it covers the gaps that A and B don't cover. You remember when we talked about if you go into the hospital, it's $1,484, and that benefit period resets after 60 days and you go in again. All of that is covered by these plans, which option 1 we're calling those Medigap or Medicare Supplement. It means the same thing.
With a Medicare Supplement, that will have a monthly premium that you would pay in addition to your $148.50 that you pay for your Part B premium. The interesting thing about these plans is that the government actually mandates that each of the plan letters have to offer the same coverage regardless of company. Now, the companies can charge you different amounts for that same plan, but they have to offer the same coverage.
The most popular plans that we have right now are Medicare Plan G, like George, and N, like Nancy. And I'll give a scenario for G, because that's the most popular one by far that we have. And here's what that would look like. If you have A and B, remember keep paying your B, you would have a premium for your Plan G, and then Medicare pays their portion. They pass on the 20% or any of the deductibles or on any of those copays or coinsurances to the plan. The plan takes care of everything except for the Part B deductible, which in 2021, as we said, is $203 once per year. 90% plus doctors accept original Medicare, which means they have to accept plan that you have if this is what you pick.
There are some cases where they won't. So if your doctor, you're concerned that they might not accept a supplement plan, what you need to ask them is, do you accept original Medicare?
Now these plans are also what's called guaranteed issue, which means the first 6 months you get your Medicare Part B, you have a 6-month time frame in which to get into one of these without what we call underwriting, medical underwriting, which is health questions. They're also guaranteed renewable, which means as long as you keep paying your premium and don't commit fraud, they have to keep renewing your policy.
Now, if you're interested in a supplement plan, we can actually provide you an unbiased report of the costs by the major providers in your area, so you know what you'd be looking at and start planning your budget accordingly for once you join Medicare. One thing to keep in mind is A and B are your foundation. Supplement fits on top of that. It does not go over Part D. You would still need a separate prescription drug plan for your prescription coverage.
Option 2 is the Part C, which is more commonly known to everyone as Medicare Advantage. These type of plans in most metro areas are typically $0 plans. And you think, well, how does that work, Eric? Well, remember, Medicare's paying the insurance company on your behalf, so the insurance company can decide whether to pass along a premium or not.
We like to refer to these as a pay-as-you-go plan because you're going to pay as you use services. You're going to have that maximum out-of-pocket figure, and what qualifies toward that amount? Well, anytime you go to the doctor, there are going to be co-pays associated with that visit. Some plans do have a $0 primary care physician copay, some don't. If you go see a specialist, they pretty much all have copays. So all of those amounts you're going to continue to pay as you go and visit your doctor.
The drug cost is a different max out-of-pocket figure. It's called the true out-of-pocket, TROOP.
So you will have copays associated with some of your drugs depending on what tier they're in, and there'll be a limit on what your amount would be for that TROOP. They're two separate amounts. You have your maximum out-of-pocket and your true out-of-pocket. Your prescription drugs only count toward the true out-of-pocket. They do not count toward your maximum out-of-pocket. So those are two different figures that you would need to factor in for budgeting purposes. What's also typical in the way that these Medicare Advantage plans can offer you such low monthly premiums is that they have networks.
There's HMO and there's PPO, usually in Medicare Advantage. HMO is the closed, controlled network. If you go outside of the network, you're going to pay 100% of the costs out of pocket. HMO is an easier way for the company to control their costs.
So one of the things that you would want to look at if you're looking at one of those Advantage plans is, are the doctors I usually see in that plan's network? Because if they're not, and you're on an HMO, you pay all the cost. Now, if you're on a PPO or a preferred provider organization, that does give you some more flexibility, but it also requires more cost. Your maximum out-of-pocket amount is going to be higher on a PPO plan, and then also your co-pays are going to tend to be higher if you go outside of the network.
These Medicare Advantage plans are popular because they have these additional benefits. And what typically the additional benefits are is dental coverage, vision coverage, hearing coverage like hearing aids. Those are the typical ones. I've seen things like acupuncture added. There's going to be a lot of options. And I saw a report on CNBC a few years ago that said in the typical metro area, there are 25 plans available to consumers. And so it could be that, could be 35, could be 45 plans.
If you're in a rural county, there may not be Advantage plans available to you. So the only option for you would be those supplement plans we talked about to get additional coverage beyond Medicare.
There again, there's that unbiased report we're going to run for you. Now, I will say this, if you want us to run your drug plan or your unbiased report to compare all the different Medicare Advantage plans, there's a document because we are taking some of your private and personal health information. It's called Scope of Appointment. It's just your written permission for us to share those plans using your private health information. So those are the only two options. Medicare Supplement, also known as Medigap, or Medicare Advantage, Medicare Part C. And we don't push one way or the other. The choice is yours, really. We would recommend one company over the other in either scenario, depending on our experience with the company and rate increases or doctor networks and things of that nature. But the choice really is yours. And we've seen where clients come to us and they say, husband wants to have an Advantage, wife wants to have a Medicare supplement. That's okay because it's very individualized to your personal situation. Now, we're going to touch just lightly on a few of the advantages and disadvantages of both.
We like to describe the supplement plans as those that offer maximum health coverage. And the reason for that is because, particularly with a Plan G, for example, you have that $203 deductible for 2021, and after that, everything else is covered. With the supplement plan, you know what your costs are going to be on an annual basis. You know what your Part B premium costs, you know what your monthly premium for your Medicare supplement will be, you know what your deductible will be for the year. So it's a little easier to know what your healthcare costs are going to be on a year-by-year basis. Medicare supplement plans can also be really beneficial if you're concerned about some serious health issues like cancer. Because the Medicare supplement plans also cover your co-insurance for your Part B drugs like chemotherapy, you can easily estimate what your costs are going to be and know that all of your care is going to be covered. Another benefit to the supplement plans is your flexibility in seeing doctors. As we said earlier, if your doctor accepts original Medicare, your specialist, your hospital, etc., you will be able to visit that doctor. You're not limited to hospital or doctor networks. Some of the disadvantages of a supplement are, what if you're healthy and you don't need medical coverage right now? Well, it's an insurance plan. You're insuring yourself for something to happen in the future that you need to have covered.
It's a very predictable, a very budgetable way of knowing what your expenses are going to be, but it's the more costly way because you're going to have your Medicare Part B that you have to pay every month. You're going to have your monthly premium for your Medicare supplement. You're going to have a premium for your drug plan. So it's the more costly way.
It doesn't include some of those extra benefits like your hearing or dental or vision that Advantage plans cover.
So we see companies that have annual rate increases like clockwork. And we see companies that have 2 or 3% rate increases. We see companies that have 17% rate increases.
While you have that guaranteed issue when you first enroll, that is not the case as you go by year. So if your plan increases the rate to an amount that you don't like, but you've had some health problems, you may not be able to switch companies to get a lower rate. The advantages of an Advantage plan are the low cost. So if you have a $0 monthly premium or maybe $20 or $30, that's less than what you're going to pay on a monthly basis for a supplement. Some of those plans give you ancillary benefits, like if it's a plan that offers dental coverage or vision or hearing, which the Medicare supplement plans do not offer. Some people just like the convenience of bundling all of the parts together, the A, B, and the D. You only have one provider to deal with, one card to deal with. If you don't like the plan, you can change it year by year and you're guaranteed to be moved on to another plan. You don't have to worry about your medical situation changing. As we talked about before, Advantage plans are really more of that pay-as-you-go. So you will pay as you use the service. You will have that copay to go see your doctors. You'll have co-insurance for certain things. You'll have copays for hospitals. And so all of those things can stack up, and it can be hard to determine how much money you should have each year because you won't know your medical situation as it changes year by year.
If you get diagnosed with cancer, there are what are called Part B drugs. Those are the drugs that are administered in the doctor's office. Part B drugs, chemotherapy drugs, these Medicare Advantage plans pass along the entire 20% that Medicare doesn't cover to the member. Typically speaking, when you hit your max out of pocket, you're fighting something like cancer because you're going to hit that max out of pocket. And here's a scenario to think about. If you get diagnosed with cancer late in the year and you're on a Medicare Advantage plan and you hit your max out of pocket, that will reset in January, and then your treatment is going to continue to hit that max out of pocket again the next year.
You are limited to the doctor networks that will take your plan.
You elect every year in October, November, and December the plan you want for January. And then, of course, doctors, once you pick your plan and you're locked into it, that's when doctors fall out of networks typically. So you're going to your favorite doctor for years, and then all of a sudden they're not in the network anymore. In July, you're stuck in that plan, in that Medicare Advantage plan, until the next year when you can go follow that doctor to the new network.
You may run into situations where some of the medical coverage you need is actually limited by the plan. We had a client, for example, who needed some physical therapy after a procedure, and the doctor prescribed 12 visits for her, but the plan would only pay for 4.
So those are the goods and the bads for both sides of the plans.
So now that you know what your options are, you might be thinking, you know what? I can get this handled. In some cases, I can tell you from personal experience, it's good to get some help. For example, I was planning this dream trip for us to Australia and New Zealand a couple years ago, and I'm busy working full time, handling things at home, and trying to plan this trip out into every minute detail. Unfortunately, I made a mistake on some of the flights and booked the wrong city to come out of that I wasn't planning to do. Now, to get that fixed, that cost $350 per person. $700 I cost myself when I could have just called a travel agent in the first place, and they would have gotten paid by the airline to handle that for me. Don't make the same mistake I did. Get help on this process because it is really complicated and involved. And the good news is you don't pay us, the insurance companies do. So this is a service that we can provide you at no cost to you. Don't miss out on that opportunity.
We would run an unbiased report for both scenarios. Again, we have to get that scope of appointment signed on this side, on the Medicare Advantage side, to share that with you. It's just because we're dealing with your personal health information and the government requires your permission to do that. But let us run that unbiased report for you. We'll run the supplements, all the different companies we recommend. We'll run an Advantage quote for you and show you what those look like, and a drug plan if you have medications. If you don't have medications, that's an easy one. We just recommend the cheap one for the reasons we've already mentioned. And then let's set up a time, a 45-minute call, where we send those to you in a PDF form. We get on the phone, we answer all your questions, and then we would make the offer to you that we would like to be your agents going forward, because this is not you get your plan and you leave it alone. In both scenarios, if you have the separate drug plan and the Medicare supplement, that drug plan needs to be checked every year, and we would do that for you. Same thing on the Medicare Advantage side. If you have medications, you need to check those drugs every year. If these plans change the ancillary benefits, the benefits we've been talking about, dental, vision, hearing, your needs are going to change. You know, a year goes by from when you needed dental coverage and now you need some hearing. You maybe need hearing aids now. You're going to want to change plans. You're going to want to talk that through with somebody. That's the unbiased report that we offer you. Well, that's the end of our presentation. Below this video in the description area, there's a link called Calendly. Please click now.
Please pick a date and time that works for you to talk to us personally. And also fill out the brief questionnaire so we're prepared with information when we call you.
And what we're going to do is also ask for your high school mascot. Mine is the Indians. Not very politically correct, I know. But if you would just put that in there, we'll use that as a passcode so you know it's us calling. It's not just one of the telemarketers that is burning up your phone right now.
Well, thank you again for spending the time with us today. We hope that you've gotten a little bit more education about Medicare, and we look forward to speaking with you soon.
Talk to you soon. Bye.